Welcome with a new edition of the Market Reporters. Taco, welcome.
Thank you.
Today we are going to talk about two companies that were in the news, two US companies. One is, I think, a little bit more the old economy, the other one is a little bit more the new economy, but they both were in the news with new developments.
That's correct. Old Academy, I don't like that.
Large company. We agreed that I may start, and I want to start with Alphabet or Google, because it's almost 1 year after the introduction of JetGDP by Microsoft and the rest of the owners. Microsoft holds 49% of JetGDP. And I think at that moment, at that day, at that week, the boardroom or the whole company of Alphabet was getting really nervous. And we talked about it in that week, and there was already in the news that the CEO of Alphabet directly shuffled with his budget and allocated much more money to the departments that were already investing in AI, because they are all, it's not new, it's not since a year, but JetGDP made a big move, I think, in the market. This week they introduced GEMINI, their newest version of AI. And the funny thing is the stock market, the share price went a little bit down, but the day after it jumped with around 6%. I think that the market first was looking for, okay, how good is it or how bad is it? And then they realized that it's indeed a big step and maybe a little bit better even already than JetGDP. JetGDP now has version 4, 3.5 and 4. Of course, Google say, okay, our version is much better than 4, but in the market you see also that the general opinion is it's slightly better. What did they do? They introduced 3 models, Nano, Pro and Ultra. Nano is more a model for mobile phones. The second one is for a little bit larger problems, and the Ultra, that can compete with the high version of JetGDP, and that can also combine all kind of different media. For example, a lot of AI is focused on text or on video or on speaking, but this combines everything. And I saw an interesting, I think we're going to put it in the screen, that you have here like that's like, I think from math exam, a quite a difficult question, and then somebody wrote the answer, and then it can analyze, okay, here you made a mistake, here you went wrong, this should be this and this and this. And also Yahoo Finance, there's not a lot yet on the internet because the market is still looking for what is it. But there was Yahoo Finance, we look at it a lot. There was quite an interesting journalist. He gave an example about a duck. There was a blue duck, and then the Gemini said, no, that is normally a duck is not blue. And then they introduced a rubber blue duck and said, hey, it can be blue, but that duck is not a drawn duck, that is a rubber duck. And so that went on and on and on. So it looks simple, but it goes really fast because it analyzes everything, and it can also start making images based on, for example, music. So it can combine all those things. I think it's, again, was also in the Dutch newspaper today, this is the fourth, I know there's a lot of talkings around it, it's the fourth economical revolution. And the first one was the agriculture, then the industry, and then internet / IT computers. And this is the fourth one. And every revolution has its impact, it's disrupting.
I still relate it to, the number 3, you know what I mean? Like internet computers, but that's maybe what they want to say. No, it's not that, it's just a level higher, no?
Yeah, but the IT is also development from industry.
Yeah, exactly, but...
So you have revolution of evolution.
And agriculture is really again. Yeah.
So I think it's an interesting. I think what I saw, it's really a well introduced application. And if we look at the company itself, first I want to say, okay, the question is also with this kind of new developments, how can you monetize it? And then JetGDP with Bing as the search engine, and Microsoft, of course, has a totally other background than Google. Google still makes the money through advertisement, through Google and YouTube. So they need to incorporate it in their BARD, in their AI product already, and then through Google Cloud they can start selling subscription fees to us. But that's to monetize it. It's differently than GDP. That they have to work on it. Now back to looking at the company, they were facing some problems this year, but at how it's estimated for this year, I think they're having quite a good year. Google. Then I have to look at my paper. Revenues jumped from 280 billion to 306 billion. Assets went up from 365 to 411 billion, and the debt is going down from 30 to 13. They make a profit of around $570 per share. The share price is around 135, so the PE is 22. So you pay 22 times the profit per share. Next year it's expected that the profit per share goes up, so then you go to around 20 PE. Now I think a PE of 20 for this kind of company, where is it happening in the world? AI, they are a really large player in it. So I think they can maybe be in a good driver sheet for that. So interesting to look at it. Bill Ackman also was really positive about it, about the new developments. Also has something to do with it that he has a stake of 2 billion itself in it.
I know.
The share price this year, the last months, it's going up and down. Are you looking at it over the long period? Then it's trading at a high moment. But mainly look at what field are they in.
Some things happened also.
Yeah, and decide for yourself. Do you believe in AI, and can it be disrupting, and can they be a big player? I think they can. So, but look at it. No dividend. They all reinvest. But that's different with your US company.
Yeah, it might even seem a little bit boring that the older economy and a brand as McDonald's, but we also know that a brand that exists for a long time, that's one thing, but the company behind it.
How long do they exist?
They were founded in 1940 in California by Richard and Maurice McDonald. And they had like the first Speedee Service System, so the ordering type. That was of course something that later was the standard for fast food. But what I wanted to say, even though it is a very traditional thing, we spoke last week, I think, also about Warren Buffett. I mean, some companies that found the trick, that is something very that has a lot of value. And of course, you need to maintain that level. But I think they are doing that because yesterday they came with the results of the last quarter and more turnover, more profit. And that's quite difficult, of course, if you have like your business established. But they managed, even though prices are higher, people are still coming.
Yeah,
and
they increased the prices a lot.
Yeah,
this
exactly.
year,
So that was a threat that maybe, people, but no, they go there. And actually, their plan is to expand from now 41,000 locations to 50,000. They are the biggest.
In 1 month?
No, sorry, 2027. So it's
2027. Okay.
yeah, so in 4 years.
4 years, eh?
Yeah,
So more than 20%.
And they are already now the biggest restaurant group chain. So actually, if you want to expand 20% more in 4 years, that's quite some ambition. So it is the old economy, but by far not boring. And actually, they also announced on their corporate site that they are launching a new brand. It's called Cosmec, and I had a look on their corporate. It looks all very tasty, but it's really based on drinks like lemonade, tea, like things like slush puppy, and all kind of mixes with some small foods.
Healthy drinks or?
Well, I'm not sure, but it at least seemed very tasty and with a lot of cream. But maybe also, I don't know, can be healthy. And they are planning now to open 10 pilot locations by the end of 2024. So, I mean, if you have something very special, and imagine that this is a new kind of shop that everyone wants to visit from their position, from their, it could be very interesting. Now it's no one knows it, but maybe if it's a new brand and everyone knows half of it, like what they know from McDonald's, you know what I mean? It can be enormous, but it's just a test.
I also saw in one of the articles that I saw this week is that they gave also an example for companies like this, or restaurants, fast food restaurants like this, that AI, because they all work on production and to be as efficient as they can be. And with AI, they know in the future if you walk in, they know exactly what you want. They recognize your face and they say slush puppy, Big Mac, and they start, do you want this? And they start already preparing it. But no, but AI, the AI thing.
I think we must put them in
combine the
contact.
companies.
Yeah. We did not plan this, but it's true, because fast food, what you say, it's big figures and standardized. Well, the stock itself, share, the dividend is 2%, so at least it's better than nothing, but of course it's also not enormous. But I think everyone knows if you invest in that company, if you did it 10 years ago, it's a very steady.
What was the share price 10 years ago?
It was around 100, and now it's trading at 280.
Wow.
So I mean, it is boring or old-fashioned, but that is for investing not a negative thing. I would say actually a positive thing. But a nice combination maybe, the old economy and some new developments where you are very confident in. But they did very well. I think that's the conclusion.
It's quite two big American companies.
Yeah.
We made the link.
We made the link.
We made the link, and they will see it. So they will start with the talkings. I think, but both companies, and then you see also how U.S. companies always work to improve and to invest and and I think both from completely different background and both really interesting developments. So investors, look at it and decide for yourself. Thank you for watching.
Thank you.
Give us your time.